In Pursuit of Higher Yield by Bill Moyse, MSCPA. Well, the Bank of Japan, the European Central Bank, and several smaller European authorities have ventured into the once uncharted territory of negative interest rates. But what are negative interest rates and how do they come about? Well, these banking authorities have had historically low interest rates for the last decade or more in attempts to stimulate their weak economic growth. The results have been anemic. So, what does a negative deposit rate at a central bank accomplish? It pushes down short-term rates on other types of lending. In theory, that is supposed to provide economic boost, and also in theory, it weakens the country's currency. Well, as an example, one home mortgage customer in the Netherlands reported that his mortgage company paid him interest each month if he paid his principal on time. A good deal for the borrower, yes, but not for the holders of that currency. What may surprise you where this pursuit of higher yield brought these European investors. One U.S. municipal bond trade reported recently 7 European insurance companies open accounts. Most American investors think of municipal bonds as a lower yield. However, the European insurance companies were comparing a negative interest rate to 5.2% rate plus the most likely depreciation of European currencies. All of a sudden, this makes U.S. municipals attractive. Well, where does a U.S. person or entity go in pursuit of higher yield? A review of the last 10 years is helpful, even though it is not a guarantee of future results, and this blog is for educational purpose only. With that disclaimer out of the way, let's review the data collected from Macau Asset Management Group's April 2nd radio broadcast. Well, we heard a lot of the doomer gloomers predict after the Great Recession that the U.S. currency was going to collapse, and you better buy as much gold as you can stand. We've all heard those ads and those articles and things like that. Well, what happened? Well, the U.S. currency actually appreciated over that time as deflation hit the commodities market. The commodities saw only an 0.8% increase over that time. Well, what did better than the commodities? Well, keep your money in cash for one. How was the bottom third of the market segments performed? Well, cash paid 1.8%, although the current yield is closer to 1%. Large caps and U.S. securities yielded a 4.1+% over the 10-year period. Next, how did the middle third of the market segment perform in the 5% range? Well, hedge funds returned a mere 5.2%. So investors pulled out $15.3 billion out of these funds in the first 2 months of 2016. Municipal bonds and A-grade corporate bonds also yielded 5.2% plus. Finally, we have the top third of the market segment with average annual yields in the 6% range. Emerging market stocks were pegged at 6%, small caps returned 6.8%, and corporate B-grade high-yield bonds yield 8.2%. What was on top of the list may surprise you, even after a 40% decline in value in 2008. The top of the yield list was real estate investment trust at an average of 10.6% annual return over 10 years. Well, what's exciting about these trusts is they are required to return 80% of their funds from operation each year to the unitholders. What's even more amazing is what performed the best in the REIT sector. There are 5 self-storage real estate investment trusts with a capitalization rate of $31.8 billion. These companies own less than 10% of this fragmented market. A fragmented market is an inefficient market that provides great opportunity for those willing to do the work. Experts say that it will be at least 2020 before the industry meets the current demand. The 5 real estate investment trusts had a 10-year average annual return of 20.3%. Let me tell you that again. The 5 self-storage real estate investment trusts had a 10-year average annual return of 20.38%. Is there any wonder why so many are excited about the self-storage industry? One large, high-end local hotel chain sold their marquee properties and invested in what, you ask? Self-storage. If some of the smartest property owners have made the switch to self-storage, would it not be wise for you to learn why? Get the little-known secrets for steady real estate income by adding your email to the pithy newsletter update list at self-storageinsider.com. Again, that's self-storageinsider.com. This is Bill Moyse today talking about In Pursuit of Higher Yield.